Welcome to the new episode of MoneyWorks4me Podcast. We are recording this session on October 4, 2021. In the earlier podcast, we discussed that investors who have recently started investing in stocks or about to start need to build a portfolio of the strongest stocks and have a system they can use to take informed decisions and take control of their investing. In this podcast, I have Raymond Moses, founder of MoneyWorks4me, to understand this better. So welcome once again, Raymond. Let's start with the first part. Why is it important for beginners to start with building their portfolio with the strongest companies?
Building a stock portfolio is like building a skyscraper. You need a very strong foundation to withstand the natural elements like high wind speed and also big and small tremors. The same is true with your stock portfolio. It has to withstand economic and market forces and upheavals because these will happen. A strong portfolio will correct less and recover fast when these things happen. And strong companies are required to build a strong portfolio.
Yes, but usually these stocks are quite expensive. So how one should go about this? You had mentioned Core 50 Superstars is a solution available to investors who have recently started investing or wanting to start investing in stocks. How does it work?
Yes, Core 50 Superstar is right for them, as all the stocks covered are very strong, large and stable companies which can withstand economic downturns thanks to their brand, distribution, switching costs, patents, etc. Essentially, they have a competitive edge and a solid management that has proven itself. But I agree with you that these stocks are usually expensive. My question is, how do you know that a stock is expensive? When would you say that a stock is too expensive and you should not buy it?
That is a very important question. As Arnabji would say, the nation wants to know.
Yes, we have to answer this very important question. At MoneyWorks4me, we evaluate the fair price of a stock based on various methods and call it its MRP, maximum retail price. Using this, we compute its upside potential. That is, the returns you would expect to earn on the stock over 5 years from the current market price. This perspective is very important because investing in equity is always for the long term, for meeting our long-term goals. Now, using this, we can take better decisions when investing in stocks.
And how do you do that?
We put stocks in 4 buckets based on their upside potential. Less than 6%, 6 to 10%, 10 to 15% and higher than 15%.
Okay, I understand that. So, we can buy stocks which are in higher than 15% bucket?
Yes, that is what we would naturally prefer. And when such opportunities arise, we ensure that our subscribers don't miss them. But let me tell you how else to use this upside potential for taking good decisions. When you earn 6% on fixed deposit, it is clear that stocks in the first bucket, that is less than 6%, should not be bought at that price. Probably some of them should be sold. Do you agree?
Yes, that's clear. Upside potential less than 6% don't buy, maybe sell, and more than 15% is a buy. What about the other 2 buckets?
Okay, when you are looking at strong, robust companies, we can buy at least some amount when the upside potential is 10 to 15% because it is still comfortably higher than 6%.
That looks reasonable. And maybe we can wait for the prices to come down for stocks in the 6 to 10% bucket. Is that correct?
Yes, that is one option.
Are there more options or ways to use this information?
Yes, you had mentioned that many recent investors have started using model portfolio, theme-based investing, small cases, etc. We can use this knowledge to jumpstart investment and build a strong foundation with the right model portfolio.
Please elaborate how.
Like you correctly pointed out, that strong company stocks are usually expensive, but we can build a model portfolio of say 10 such stocks from 3 buckets of upside potential, more than 15%, 10 to 15% and 6 to 10%, and invest some of our surplus immediately even when the market is bullish. Why we can recommend this confidently? Because the stocks are all strong companies and the overall portfolio is likely to generate at least inflation beating returns.
And can we do SIP in them?
Yes, money saved every month can be SIP'd in this way.
So, with the help of Core 50 Superstars, investors can invest in the best companies through a model portfolio and also as an SIP confidently. because the upside potential of this portfolio is still likely to generate inflation beating returns.
And subscribers have access to the MoneyWorks4me platform, which has the information, research, analysis, analyst insights, and tools. So, with Core 50 Superstars, subscribers can go beyond the model portfolio and SIP way of investing.
Okay, and how?
One, when any core stock is available at an attractive price, we recommend subscribers to add this to their portfolio over and above the model portfolio. These opportunities are then not constrained by the model portfolio method. So, a good way to do this is to say that you invest 70% of your current investable surplus in the model portfolio and keep the remaining for such attractive opportunities. These opportunities are likely to enhance the portfolio returns since they are always bought at attractive prices. In case an investor does not have additional money, they can choose to sell a stock from their portfolio with a lower upside potential and buy the new opportunity if they are convinced about it.
Oh, that's really a very valuable feature for investors.
Yes, it's really, as they say, sone pe suhaga, or icing on the cake.
Yes, it indeed is. Before I end this podcast, let me ask you if there is anything more that subscribers can get from Core 50 Superstars that is valuable for them.
Yes, there is something more which is very valuable. Subscribers have access to research of the top 50 core companies and not just the companies in the model portfolio. So they can identify opportunities on their own, especially if they are working in a particular field or reading and following a particular industry or even a company. The solution does not end with getting a model portfolio, but starts with it. It does not end even with getting good opportunities to invest in at attractive prices. It is a great opportunity to learn about how to invest in stocks and to do it with the guidance of an expert. So you are in the positive do, learn, do growth cycle. This will certainly make people a better, more capable and matured investor.
Yes, something they will need as their surplus grows. Thanks Raymond, it was pleasure speaking to you.
Thanks Aditya.
To all our listeners, if you want to know more about Core 50 Superstar solution, click on the link below to explore more. Till then, happy investing.